Information presented in this podcast is provided for general information and is not intended to be legal advice for any specific situation. Welcome to the Nonprofit News and Knowledge Podcast, sponsored by NonprofitLawChicago.com and the law firm of Bea and Vandenberg, serving nonprofits from Chicago all over the nation. During this episode, I will be addressing the question of whether you should organize as a nonprofit or a for-profit, organizing for-profit businesses. It's very common for people to call our office and have a question. And the question is, they're not sure if they should set up a not-for-profit or a for-profit corporation. They've got an idea, they've got a plan, it's in some way trying to make the world a better place. It seems like it could be a nonprofit, but it also seems like it could be a for-profit, maybe a social enterprise. And so they're wondering what structure is best. What we do is we go over the characteristics of each, because by hearing the characteristics of each, I think it helps people to decide what feels like a better fit. So let's start with nonprofit. First of all, it's kind of odd that we have a whole sector of the economy that is defined by what it doesn't do rather than what it does. But bear with me here. That is the name that's given to the segment. It should also be noted that nonprofit is a misnomer. It suggests that the organization cannot make a profit. What's a profit? A profit is if you add all the income over a period of time and you subtract all the expenses over that same period of time. If you have money left over, that's a profit. The Illinois law has a slightly better name that's a little more clear. It's not for profit. And the reason that's better and more clear is because it suggests that it's not for the purpose of generating a profit. And that's the key issue. It can make a profit in that it can take in more money than it spends. But it's not doing it for that purpose, and it's not doing it most importantly for the purpose of turning those profits over to a shareholder. All for-profit businesses have owners, and nonprofits don't have owners. That's the real difference. There's no owners. Now you might say, well, I know people who started a nonprofit and they said they owned it and so forth. And yeah, that may happen, but those folks are actually suffering from a misunderstanding. They don't technically own the nonprofit. Instead, they are its directors. They're the people who control it. Nonprofits have directors, and they control it. And in Illinois and most states, you must have a minimum of 3 directors. You can have as many as you want. And there's another difference between nonprofits and for-profits. With a nonprofit, you can start it with one person, and one person can run it and make all the decisions. With a nonprofit, you share that control with a board of directors, minimum of 3 people. One of the implications of not owning a nonprofit is that the founders cannot cash out. They cannot someday sell the business and get rich and buy an island and retire, which is what everybody wants to do with a business, right? But you can't do that with a nonprofit. Nonprofits are often donor funded, but they can charge fees for services and they can make sales. There are lots of nonprofits that charge fees for services and make sales. Think of universities, think of hospitals. Another characteristic, of course, of nonprofits is that they can qualify for federal tax exemption. And this is a big difference because none of the for-profits will qualify for federal tax exemption, but the nonprofits can. And it's actually 2 steps, setting up a nonprofit corporation and qualifying for federal tax exemption. Those are actually 2 different things, but for the most part, anybody starting a nonprofit is probably wanting to get federal tax exemption. The code section that we're talking about for our purpose is Internal Revenue Code Section 501c3. That's the section that covers charitable, educational, religious, and scientific organizations. So it's all the churches, all the private schools and universities and colleges, charities, soup kitchens, any kind of educational organization besides, organized schools, and scientific research organizations that publish their results for the benefit of the public rather than doing private R&D for a company. And then, of course, churches, I may have said that already, mosques, synagogues, any of that, those are all under 501c3. They must be organized and operated. To get tax exemption, there's a two-part test. They must be organized and operated for exempt purposes. This means there needs to be special language in the organizing documents, and their primary purpose must be to advance a charitable purpose. Charitable as defined by tax law. And that's a broad umbrella term in this context for all of the above that we were just talking about. When you have federal tax exemption, the assets of the organization are dedicated to charity forever, which means if it ever closes, any remaining assets must be distributed to another 501c3. There can be no private inurement. This is like the only place in the world where that strange word inurement seems to get used a lot. And what it really means is that we're not generating profits for owners, or owners are not unduly making excess money from this enterprise. So compensation has to be reasonable, and there's a test for establishing what's reasonable. And it's contextual. It depends on the size of the organization and the position, and what others may be paying as well. And an independent board has to make compensation decisions, that is, people not related to the person being compensated. There's another characteristic of 501c3s is that they are under charitable solicitation regulation in about 40 of the states, including D.C. Also, they cannot advance a political purpose, that is, they cannot be for or against, directly or impliedly, any candidate for public office. And as to trying to change laws, as to lobbying, they can only do a very minimal amount of that, and it is potentially could cause problems if they exceed that. They are subject to public disclosure. They have to make their finances known to the world through state and federal reports. And so that, of course, distinguishes them from for-profit businesses. You know, your private for-profit businesses don't reveal their finances to the world, whereas these do. Nonprofits, even if they have 501c3 tax exemption, they may be subject to other kinds of tax. They will be subject to employment tax, just like any other employer, if they employ people. They will have to pay sales tax in many states if they sell things, and they will have to pay sales tax in many states if they buy things. But there is a patchwork of exemptions available, both for sellers and for buyers, in various states. That has to be handled on a state-by-state basis. They can be liable for unrelated business income tax if they get into businesses that are unrelated to their charitable purposes. And if that happens, states will kick in income tax as well, whereas ordinarily these things are exempt automatically from state income tax. If it's a private foundation, which is another whole advanced topic for another day, then there would be an excise tax on its investment earnings and potentially other taxes depending on activities. And then if any of these things own real estate, there will be property taxes unless they qualify for and obtain a property tax exemption from the local taxing authority and the state. They need to have certain policies as part of their organizing documents, including a conflict of interest policy, a whistleblower policy, which has to do with if an employee discovers fraud and reports it, they cannot be retaliated against. There needs to be policies about how they retain records and when they can destroy them. A compensation policy for setting that chief executive's policy compensation to make sure that it is reasonable. If they do a joint venture with a for-profit business, they definitely need legal counsel to structure that. It's very easy to do that wrong and to get in trouble, but they need a joint venture policy if they're going to do that kind of thing. And the IRS asks whether they have all these policies on the annual 990, that is the annual information return that they file with the IRS. So they have annual reporting requirements. They must report to the Illinois Secretary of State once a year to keep their, that's if they're in Illinois, and then otherwise a different state if they're organized in a different state. They must file with the Secretary of State or the government entity that created them. In some other states, it'll have a different name, but in Illinois, it's the Secretary of State, and very often it's the Secretary of State. They must make an annual report to the IRS. One of the 990 forms is used, either the full 990 or the EZ or the N. The N is the simplest for the smallest organizations. They must report to that charity regulator in those 40 states, including D.C., if they solicit funds in those states. There's no need to register if they don't solicit funds in those other states, but they will need to register in their home state if it's one of the 40 that requires registration. And then there'll be other kinds of reports like employment tax filings, just like any other business, and sales tax filings if they're selling things. That, in a nutshell, is a look at what nonprofits are like. And I find, again, the big question is, should we be nonprofit or should we be for-profit? It can help people to hear all of those characteristics. Now they know what that's going to be like. Next, we'll look at what are the for-profits like. How do they differ? Because this, too, will help it come into focus whether you should organize as a nonprofit or a for-profit.